Good morning and welcome back to the ETF Inspector. It's Sunday, August 31st, a little after 8 o'clock in the morning, and this is our week look ahead and payment guesstimate video for our two YieldMax Ultra Income ETFs. The first is ULTY, the Ultra Option Income Strategy, and the second is SLTY, the Ultra Short Option Income Strategy ETF. As always, I'm on X at ETF_Inspector1. I post everything about these videos or things related to these ETFs, including yesterday morning we did a nice Spaces talk. So if you didn't get a chance to listen to it, it's pretty interesting. It was hosted by Ambassador of Quan and Parabolic Nurse, and then three speakers: Max Convexity, ETF Delta, and myself, speaking all things ULTY for the past week. So very interesting. If that sounds like the same thing you're already getting from my video, it's not. It's definitely more opinions, more highlights of different things, and different types of breakdowns. So it's definitely interesting, and I enjoy doing it. So, all right. Before I get into the video stuff, I always like to start with thank yous. So I've got two from Friday's video. Phenomena Yar, I think I'm saying that right. A new $5 super thanks. Thank you very much. This is not the first time. I do remember doing a shout out for Phenomena before, so thank you once again. Very kind of you. And then during the video, now for some reason super thanks come up in the notifications, but super chats don't. So that's why I take a highlight or stop a video in the middle so I can show you. Chaston Graham gave $20, and that name shouldn't be unfamiliar because on the previous ULTY or LFGY video, Chaston Graham gave $50. So that's why when two days in a row, my response, man, are you serious? So thank you, Chaston. Thank you, Phenomena. Very much appreciated. Okay, so let's get into it. We'll start off with ULTY. Let's take a look at how ULTY did over the course of the week. All right, so from start to end, it was down 0.35%. So not bad, especially when we consider that there was a distribution of 9.5 cents in the middle of that. So realistically, had Friday not been such an ugly day, we would have ended up for the week and paid out a distribution. So that's what we're used to from ULTY about a month or two ago. So we'd like to get back to those times. But again, this wasn't an ULTY problem. This was a market problem. So I mean, show me what you had that didn't go down on Friday. Obviously, some things didn't, but that's okay. All right, so we'll take a look at our pages here. We start off. ULTY had approximately 315 trades throughout this past week, so not the most for sure. Kind of manageable. There were a lot of days where they were only trading the options, not the stocks, and those days are always kind of save me on some trades. I will highlight one trade here. So if you were watching the videos, we did a calendar spread on Ulta Beauty this past week. From listening to Max Convexity, he said that is typically an earnings play. So it was kind of, from what I read, it was kind of a neutral take on earnings. So earnings kind of bump up the volatility for sure. So they bring in extra premium. But if you don't necessarily think that the underlying is going to take off or drop drastically, and you want to take advantage of that volatility, you do a calendar spread. So it's a debit type thing, so it costs $207 up front to put this play on. So we'll scroll down. All right, we're on Tuesday's trades, Wednesday's trades, Thursdays, and then finally Friday. And on Friday, when we closed that ULTA trade out, we received $308,000. So this doesn't seem like a big deal, right? We're in a $3 billion fund, but trades are all about percentages, right? Because you don't have $3 billion, but you can follow along with these trades, and a percentage is a percentage regardless of how much money you apply it to. So if you spent $207,000 and you received $308,000, you had $100,800 profit. Well, that over a week, that's 50%, and 48.65 to be exact, and that annualized is 2,529%. So that was an awesome play. Obviously, not a big money play, but 2,500% annual yield based off of the 1 week 48% gain. So that's what you pay the pros for. All right, so when we take a look at this whole week, it was a rough one. We kind of knew it would be, because the previous week we had rolled most of our positions by Thursday, and then the previous Friday was absolutely crazy. There it is, right? So if you had already sold all your calls into the next week, and then the stock market does this, you're in trouble. All right, that's just ULTY itself, right? But so we knew right from the start we were going into the week with lots of, I want to say maybe half of our options were already in the money. So you're gonna have a negative trading week in that instance, because if anything goes up, you're gonna have to pay to close everything out. So it was a debit on Monday of $35 million, debit on Tuesday of $27.5 million, debit on Wednesday of $364,000, debit on Thursday of $30.1 million, and then finally on Friday, when we rolled the rest of the positions into next week, we finally made it a little bit of money, $1.6 million. So overall, $91 million spent on options trading this past week. So you could call it lost. But the previous week we did make over $100 million. So and they did not pay out all of that. So maybe that's a good thing. So, but either way, it was a rough week. Kind of just got to get through it. I likened it on the talk show to in football, if you had like the Monday night game and then somehow got hit with the Thursday game. They were set up for failure from the start. And not making excuses for them, they're the pros, but I'm just explaining what happened. Now, at the same time, right, the stock market had to move up. Your underlyings had to move up for you to have to pay to close those out, and that's what it did. On Monday, our share values increased by $4 million. Tuesday, they went up by $52.5 million. Gave some back on Wednesday, $37.6 million. Thursday was huge, up $96 million. And then Friday, again, another down day. If it weren't for Friday going down, this would have been a whole different story. We would have been up over $100 million. But it dropped $64.8 million. So all in all, the value of all our holdings within the fund went up by $50 million. So this is how we get to our first part of the estimate, but it's not really going to help us any. We take the total profit and loss on the trading week and divide it out by the amount of shares. But since it was a loss, it comes out to a negative number, and we know that's not what we're doing. So we move on. Next, we take a look at our IV. All right, so when we go through, each holding is in gray. The weighting, or the amount, this is basically just how much money is in this holding divided by how much money is in all the holdings. So we've got 4.5% in Affirm, and their 30-day IV dropped to 56.3. That's why I've got that plus or minus sign below it to tell us whether or not it was an increase or a drop. I like to use Market Chameleon for my 30-day IVs. So next we have AppLovin, and as you can see, we're really starting to get large positions in these things. $132 million just in one holding, 170, 160. So getting very big. That's why small moves still increase or decrease by a lot our holding value. AppLovin getting pretty heavy weighting, given the standard in ULTY is in the 4s percentile wise. AppLovin's 6.1%. Their 30-day IV went down to 55.8. Now I do want to explain, this is the IV of the underlying itself. It's not the IV of the options. Obviously, there's more volatility in the options. That's why when we're going to total them all up, we give them a weight, but then we'll make some adjustments. AST Space Mobile, 5.75%. That was an increase to 77.9. We like increases. Webull, smaller position here, 2.86%. It dropped in IV to 77.4%. Coinbase Global, just over 5% of our money, decreased to 50.6%. Credo Technology, 4.16%. It was an increase to 99.4, and I highlighted it just so I'd remember. They have earnings coming up, so that's going to be the reason why the IV is increasing on that. CoreWeave, 3.79% of the money. It's a decrease to 67.5% IV. This is just our government funds, so that's not really playing into our IV. Galaxy Digital, we used to own shares of it. We got out of that on Friday, but we still are trading the options on the stock, so that's why we've still got lines here for it. Robinhood, 5.3% of our money. It's a decrease to 59.9% IV. IonQ, almost 6% of our money. That's an increase to 71.5%. So another nice, we like increases, especially on heavyweights. Nebius Group, almost 5.5% of our money, dropped to 70.1% IV. Oklo, 5.79%. That's a drop to 78.9% IV. Palantir Technology, almost 4%. That's a decrease to 48.3% on the IV. Reddit's IV dropped as well, 60.6, with 4.75% of our money in there. Rigetti, 5.62% of the money, has a 80.9% IV. That's an increase. Another increase, Rocket Lab up to 73.8% with 6.27% of our money. So Rocket Lab's been going up a lot. I want to say Rocket Lab, I don't know if they went up big after hours or if they just had some announcements after hours. No, they actually dropped, but there was some test launches or something. EcoStar, this is our new one, so that's why it's got a plus or minus, because we didn't have it last week, so we don't know what the change is. We're kind of just jumping on this one because of the high volatility, not putting it nearly as much weight in it, 2.3%, but it is a very high volatility fund stock, EcoStar, 128.6%. Super Microcomputer, 3.6%. We actually, I think, increased our holding in these guys this past week. That's a drop to 53.2% IV. New Scale Power is about 4.5% of the money. 77.9% is a decrease in IV. Another decrease for Tesla, 43%, with 3.3% of our money in there. Unity Software, 4.75% of the money, is an increase to 67.7%. And finally, Upstart, just over 6% of the money, is an increase to 64.8%. So there are a total of 21 held stocks within the fund, and then one more traded, Galaxy, but 13 out of those decreased in IV this past week. So we are starting to see lower, but again, this is not taking into account all the options, but that weighted average of the 30-day IVs did decrease to 68.2%. Now again, that doesn't take into account the options. So overall, we should expect the options would have decreased if all their stocks themselves decreased, but they're going to be higher because options obviously have more volatility than the stocks themselves. Okay, so when we come back, now we've talked about IV. Let's go ahead and see what that math comes out to. 7.5 cents per share. Now don't get panicked. That again is based off of the closing price on Friday multiplied by the weighted average of the IV. But that doesn't take into account that we need to sorry about this, too early in the morning to be making videos, that we need to adjust for the fact that there's more IV in the options. So with all that said, my estimate is 9.25 cents per share, 9.25 cents per share. That would be an 84.83% annual yield. So some people are thinking we're going back to 10 cents. I don't think so. But last week I said we were, what did I say last week? No, I think I said, I can't even remember. Okay, so I think it's going to be 9.25. I think that they ripped the Band-Aid off last week, even though we had a good week, just to kind of set the tone that, hey, we need to get to a more realistic percentage back in the 80s. That 90, 95 was getting out of control. All right, next we're going to take a look at how we are set up for the week with our options. Again, I usually announce this at the beginning of the video, so if you've made it this far, good for you. But this is our deep dive video. This is not the short and sweet, get you the info and get out. It's the weekend. We've got time to look ahead at the week, so we're going to take the time and look how every stock is positioned. Sorry, trying to take a drink to get rid of this morning voice. So for starters, Affirm Holdings is at $88.46. We've got calls sold this week at 93 and 100, a whole lot more, 6.5 times more at 100. They're 5 and 13% out of the money. We like that. AppLovin sitting at $478.59. They've got calls sold at 490, 495, and 505. The two outer ones are practically even, then there's a small position in between them. 2.3, 3.4, and 5.5% out of the money. AST Space Mobile just under $49. They've got a $49.50 and $50 calls, pretty evenly split, 15 and 16, almost 17,000 contracts. And then also 51s with a smaller position, 2,100 contracts. They're 1, 2, and 4% out of the money going into the week. So with that being said, these out of the monies, obviously they still have lots of value. Here's where they closed. But if they were to end this way at the end of the week, they'd all be worthless, right? Because if you sold a call to sell your shares for $49.50 and they closed at $48.94, nobody wants to buy them for $49.50 if they can just buy them for $48.94. So that percentage difference is how much the stock can go up while these options are still in our favor, we'll say. Once they go beyond it, now you're looking at a cost to close them out that may exceed what you paid, depending on how far beyond it and how much time value is left. So if they jump past it early in the week, they might go ahead and close it. If they jump past it right at the end of the week, it might still be worth it to let things settle out. I don't know if I said it. Those are 1, 2, and 4% out of the money. Webull, $13.59. They have $14.50 and $15 strikes on the calls sold. A whole lot more, 47,000 compared to 13,000 at the further out of the money mark. They're 6.7 and 10.3%. We like those numbers. Coinbase Global, 304.54. 312.50 is the sold strike price on the sold calls. 2.6% out of the money. We know Coinbase could do that in a day. We could be in trouble, or Coinbase has been having a rough going lately, so maybe playing these closer will help us collect more premium. I do want to point out, so let me click here so I don't forget where I was. ULTY trades a collar strategy almost all the time. Every once in a while we'll see something different. So that's holding the shares, selling calls to generate income, buying puts to protect the value of your shares. As you can see, we are kind of back to a normal from the last week or two, where our calls are decently out of the money and our puts are as well. Not like the stocks dropped so harshly that our puts are right at the money and super valuable. They're basically insurance. Now, we've been making a lot of money off those puts lately because things have been dropping, and that's what has protected ULTY from dropping much worse than it was. But I just wanted to point that out. Our options are a little further back to normal. Okay, Credo Technology, $123.06. They've got calls sold for September 5th and September 19th. So far, everything we've talked about so far has just been this coming Friday, September 5th. I'll highlight when it's something different. $139 calls sold for this week are almost 13% out of the money. $120 calls for the middle of September are already 2.5% in the money. But since they're in the money, they're only in the money by $3.06. But since there's so much time left, they would cost $14 per share to close out. We don't want to pay that. CoreWeave 103.04. They've got 107s sold, 10,600 of them. They're 3.8% out of the money. They split up the puts here, 2,000 at 90, 8,600 at 94. So just trying to save a little bit of money on buying that protection. There's a couple ways they do that. Sometimes they'll split up these strikes on the puts to buy cheaper ones. Other times they will actually sell further out of the money puts to help pay for the insurance policy. First American Government Obligation Funds, there's $140 million sitting on the sideline there. There's another $160 sitting in cash. We'll scroll down to show it to you, $165. So they've got $300 million, kind of dry powder, we'll call it. So Galaxy Digital, we don't own any shares, and so we don't have a collar strategy because there's not shares to protect. And it seems like they have a negative sentiment on it, which would make sense why they got out of the shares themselves. But they're still playing it, and they've sold put spreads. So they've sold 2450s and 24s as their put strikes, and then purchased 23s and 2250s to go along with them. So currently, both of these put spreads are going against them, with the stock closing just under 2350. They need to get above 2450 to win both these trades. Getting above 24 will win the higher percentage, 2/3 of the trades. Robinhood Markets, 104.03. Didn't we? They kind of have like a inverse type number of CoreWeave, $104.03. They've got calls sold at 108. They're 3.8% out of the money. IonQ 42.74 closing on Friday. They've got calls sold at 43.50, 44, and 47. Sorry, I was looking at over here. 45. 16,000 and almost 18,000 on the two ends, bookends, and 5,500 in the middle. 1.7, 2.9, and 5.2% out of the money. So they're, as Rod would say, scatterdy-do. Nebius Group, $68.32, $68.32. They have $71 calls sold. There's 3.9% out of the money. Oklo, $73.64 closing price. Calls sold at 77, 81, and 83 are 4.5. We'll call it 10 and 12.7% out of the money. That's looking real nice to be able to win those trades this week. Palantir, $156.71. They've got 160 sold as the sole strike price, 2.1% out of the money. Reddit, I think this is our first call that's for this week in the money. Credo's got one for September 19th in the money. Galaxy's got puts that are already in the money. So we got Reddit and Rocket Lab have a couple calls in the money. They're 220 with the stock at 225.08 is 2.25% in the money. They've also got 227.50s that are 1% out of the money. Rigetti Computing, 1623 closing price. They have 17s and 1750s sold, 4.7 and 7.8% out of the money. Rocket Lab, here's another one, had a big week. I know I clicked on it to see the after hours, but what'd their week look like? Really, Monday was the big day, but overall for the week up 9.4%. 48.60 was the closing price. They've got 48s and 48.50s already in the money, 1.2 and 0.2%, and then 50s are 2.8% out of the money. EchoStar, this is the new one. Don't know really anything about them, $61.79 closing price. They have 63s and 65s that are 1.9 and 5.2% out of the money. You'd normally say that seems kind of comfortable, but they have 128.6% volatility. So they could absolutely blow through these in a day very easily. SMCI, $41.54. We've got 43s, 46s, or 46.50s sold as far as calls, 3.5 and almost 12% out of the money. And then they've actually sold some puts to help pay for the protective puts. They're 10.9% out of the money. So anything we sell, we're going to highlight it because we're going to track that. It's generating income. Anything we purchase is realistically an insurance policy. I don't know if I mentioned I'm filming this from my backyard. I'm getting attacked by bugs here. So there's 37. So realistically, we're protected on the 18,000 contracts from 38 all the way down, but on the 7,000 contracts, we're really only protected from 40 down to 37. So if they thought that the stock was going to drop below 37, they probably wouldn't have done that. So they feel like it's in a pretty safe trading range to try to generate some extra income to help pay for the insurance policies and overall keep more premium. New Scale Power, $34.65 closing price. They've sold calls at $36.50 that are 5.3% out of the money. I just want to go back to this. I like this strategy. They were doing it more of it last week and the week before because the puts were getting so expensive. It seems like maybe the puts premium have kind of calmed back down to normal. But I'd like to see this strategy more often. Even if they pick a even lower strike, just bring some money in to help pay for the cost of the insurance policies on the ones where you feel comfortable. Obviously not the crazy ones, but on the ones where you feel comfortable that they're not going to drop $5-10. New Scale Power, I think I just said it, $34.65. They got 5.3% out of the money. Tesla, $333.87. They're 3.33%. Whole lot of threes out of the money. $345 is the strike price sold for this week. Unity Software, $39.41 is the closing price. $40.50 and $43.50. Whole lot more at the closer strike, 2.7% and 10% out of the money. And finally, Upstart, $73.28 closing price. It was only a week or two ago we were worried about the $60 mark. Upstart made a nice rebound. I trade them sometimes. Where'd I go? Yeah, so they dropped down to like 61. They're already back up over 73. They've got 76s and 77s sold this week. Fairly even, 10,000 and almost 14,000 contracts. 3.7 and 5% out of the money. All right, so that's everything, how we sit for the week. We're trading ranges that would be ideal for us to increase our value without having to pay to close out the options, kind of getting the best of both worlds. There's $3.1 billion in assets under management. On Friday, some people did sell back out of the fund. 1.2 million share drop from outstanding shares, bringing us down to 555,100,000. Our NAV, or the value of everything we have, came out to $5.67 per share, which just so happened to be what our closing price was on Friday as well. Most recent distribution on Friday, we all got 9.5 cents, 9.49 cents to be exact. And that's everything we've got. ULTY. Okay, so I'm thinking we're going to drop again from that 9.5 to 9.25, but that gets us back into a realistic range. Next, we're going to go to SLTY. We're not going to go nearly as in-depth on them, but we will kind of talk about some things. So, SLTY, whole lot smaller fund. All right, we're talking in thousands of dollars rather than millions most of the time. So this is actually from the start because they started in the middle of the previous week, so they didn't do any kind of declarations or payouts or anything like that. So we're kind of totaling all the information. And so from start, August 20th, to the close on Friday, 135 trades approximately. That doesn't seem right. I think there's 135 trades the first week. I must have. All right, we'll do some quick math. From line 9 to line 231. So approximately 22 trades, 220-ish trades performed. I must have made that for last week. So we already talked about last week's trading in last week's video, so we'll jump up to this one. This week started on the 25th. Not a lot of moves. They made some adjustments on RH, and then they started a calendar spread on ULTA as well. So both ULTY and SLTY traded this ULTA spread just in opposite directions. So at first, people were saying, hey, wait a minute, why are we doing, it's not supposed to be an inverse. Well, if they're overall neutral and they're trying to make money on it in either way, they attempted it in the downward position on the SLTY fund and in the upward strategy in the ULTY fund, because they were neither bullish nor bearish on it. They thought it was going to be neutral and just played it in a bullish strategy on one and a bearish on the other. So that's interesting. They did all right on it, not quite as well as in the other one. They had an overall debit of $440 to open that play over here, and then when they closed it out, they received $568. So about $128 made on a $440 investment. So over 25% in a week. I can't remember what that math came out to, but let's just so 25 times 52. I should be able to do that. 1,300. So would that be? I think that'd be 1,300%, right? Because technically that should have been 0.25. Yeah, so that's 1,300%, or whatever. I don't know. All right, so when we take a look, the first week, they ended up bringing in $5.6 million, but that's realistically, a lot of that was putting the new money to work by selling short on the shares, so short selling the shares. It's going to be kind of hard to come up with estimates on SLTY based on that. So the following week, they really weren't shorting any shares, or if they were also buying to close at the same time, so they're kind of offsetting. So in the second week, it was a negative $413,000 as far as profits and losses on option trading. Share values dropped by $138,000 the first week and another $195,000 the second week. So, and when we say share values, we don't mean the shares themselves, but this is the problem. The shares themselves went up, but since we shorted them, our values went down, because when you short something, you need it to go down in order for your value to increase. So that's a lot to say. I don't even know what to give them estimate-wise, income-wise, especially since it's a 2-week thing. I don't think we can say they made $5.6 million, because they basically just put that to work. I know on ULTY, people were upset that I wasn't including the actual share trading into the estimate. I have my reasons, but since we started SLTY right from day one, I went ahead and included everything. But if we said $5.6 million was going to get paid out to 125,000 shares, well, we only have a $6 million valuation total, so they'd be basically paying us out $40-some and the fund would be closed. So it's not going to make sense to include that into our estimate. So we lost money trading this past week. I just put a negative here. Obviously, it's not going to be negative. All right, next we go ahead and look at the IV of each of the underlyings. So the first week, just to give you an idea of what I think this fund is going to be paying, I actually did look up every single option volatility and averaged out all the percentages to come up with a somewhat 80 to 85% range. Now this week I've updated all the IVs to just go along with the stocks, so we know the IV estimate will actually be higher than that, but I'm not going to have the time to look up every option every single week. So we'll start out Astera Labs. The stock itself is a 65.1% IV. That's a 7.62% of the holdings is within this. So these guys are very similar to ULTY in that they're pretty evenly allocated. ULTY's averages in the 4s and SLTY's averages is in the high 6s, and that's just simple math of there's approximately 13, I believe. 13 underlyings with all the money basically evenly spread between them would be 7.6%. So you're going to get a little higher, a little lower, just based on how things perform. But Applied Digital is 7.89. Realistically, all right, we're going to all be in that average 7 range. If we see some real high or real low, we'll point them out. So Applied Digital is 86.3% IV, Bloom Energy 91.2%, Bitmine Immersion 102% IV. So they added Bitmine and Bitdeer, I think Friday, maybe Thursday. Bitdeer 87.9% IV, Circle Internet Group 66.8%, Enphase Energy 60.9%, GitLab 77.8% IV, Lululemon 68.1%, Mara Holdings 65.2%, MicroStrategy 55.9%, and they are on the lower end, 6.9%. Are they the lowest? They are. Looks like Bloom Energy is the highest with 8.85%. Strategy 55.9% IV, RH 91.5%, and Tempest AI 67.1% IV. Is MicroStrategy also the lowest IV? It is. So that makes sense. So if we average those up for the underlyings themselves, that's a 76.1% IV. Obviously, the options are more, so we're going to use a higher number than that, but at least that gives us a baseline. Closing price on Friday for SLTY was $48.66. Let's take a look at their week. They were interesting. They had a lot of bad days, and then after hours they would make it up. Similar on Friday. So SLTY had a good day on Friday because markets were down, so they went up almost 1%. But then after hours they went up another 1.6%, so they're almost made up all the ground back to their starting price. For the week, as you can see, rough week. But like we said, after hours, they basically made it almost all the way back up to here, so it would look like a straight line. Obviously not a straight line because it's got the dip in the middle. But all right, so with that information, we're going to come up with an IV estimate saying 74.95 cents, and then just my guesstimate, and I didn't really stray far off of that, 75 cents. I think they're going to be paying around that. Let's see what that would come out to. Closing price times that divided by 52. That doesn't seem right. I feel like I'm doing something wrong. 48.66. All right, so maybe I don't think that's what they're going to pay. Something's not making, the math's not mathing. Somehow 48 times 80 maybe I didn't mean to. I'm not sure how multiplying by 80. Okay. Anyway, I'm gonna adjust it right here live on the screen. Let's go 80. Man, do I think they're gonna give 85 cents? Well, I'm gonna put 85 cents. Let's see, especially since it's a 2-week one. And realistically, if I was gonna surprise, I think it might surprise upside because I think it's gonna be more like a 80 to 85 range, especially with it being a 2-weeker. But I don't want to put a number any higher than that. What would it look like if they paid $1? 93. That's too much. They're gonna pay 90 cents. All right, we're spending too much time on this. Let's go 90. Let's go 80. They want to make a splash. Brand new fund, first payment. Let's go 90 cents. All right, we'll see. We'll see. We're spending too much time on Salty. There's 125,000 shares, right? There's not a lot of people even watching for Salty, so I'm spending way too much time here. $6 million in assets under management. They trade a reverse collar strategy. So since they shorted the shares, they have negative shares. They're selling puts to generate income. They buy calls to protect in the event it goes up, because if it goes up, it's going to cost more to close out these shorted shares. So we're going to run down much quicker. Probably no one watching. Puts at 182.50 for Astera Lab. They're already starting the week in the money, 0.16%. Puts at 16 for Applied Digital, starting in the money at 0.13%. Bloom Energy puts are at 52. They're 1.7% out of the money. Bitmine Immersion puts are at 43. They're 1.4% out of the money. BitDeer puts are at 13. They're 9% out of the money. Circle Internet Group has puts sold at 125 and 126, 4.5% and 5.2% out of the money. Enphase Energy, $36.50 puts are 3.1% out of the money. They've got $2.4 million in government obligation funds and $8 million in cash, but that's we can't call it dry powder the same way we can on ULTY, because ULTY's money can just go buy more shares. They need to hold back money to be able to buy to close shares. So we're always going to have large amounts of money sitting on standby because we didn't technically buy these shares. We sold them to start. GitLab's got $47 puts. They're 2.1% out of the money. Lululemon has $195 puts. They're 3.5% out of the money. Mara has $15.50 puts, 3% out of the money. MicroStrategy or Strategy, $327.50 puts are 2% out of the money. RH, $220 puts, 2.5% out of the money. And finally, Tempest AI, $72 puts. They're the new one that got added at the end of the week, 5% out of the money. So realistically, we're playing pretty close to the money. BitDeer's 9%, but BitDeer's got a decent IV. Bitmine Immersion's kind of dangerous, 102% IV, and they're only 1% out of the money. But if it goes up, well, you'll win the option trade, but you're going to lose on the share prices. All right, we already talked about the holdings. And so technically everything they own was valued at $48.61 per share. There's about a 5-cent premium going. People are paying just a little bit more than that, closing at $48.66, but then everything went up, so that means a lot of these shares went down after hours on Friday. All right, that's all I have for you. Thank you for watching. I got a dad joke for you. And before I do, thank you. Thanks for all the likes, comments, shares. YouTube gives me reports every week on how many comments, how many shares, likes, all that stuff. It's pretty cool to see. Channel's growing, so let other people know if they're into anything I cover. ULTY, SLTY, LFGY, zero DTE funds from Round Hill, YBTC, or just my own personal trades. If you just like to see how somebody else trades, definitely not a pro, just doing this for fun. Probably will make some sort of a deep dive into some other ETF on Monday, since the markets will be closed, so keep an eye out for that. And that's it. So dad joke of the day: I got hit in the head with a can of Coke today. Don't worry, I'm not hurt. It was a soft drink. Okay, thank you everybody. Have a great Sunday, and I'll talk to you later.